as promised in this year-end series of Commodity Central, we now take a look at what 2024 looked like and what the outlook will be for next year. Yesterday on the show, we put the spotlight on precious metals and crude oil, and today on this edition of the show, we will take a look at and discuss in more detail base metals, and we will discuss all that and more. And to help us understand what 2025 holds in store for us, we now have Kaynat Chainwala, Assistant Vice President Commodity Research at Kotak Securities, now joining us. Kaynat, thank you so much for taking your time out and speaking with us here on ET Now. And before we talk about base metals, let's first talk about the shining stars of commodity market, gold and silver. What a year it has been for precious metals, isn't it? Geopolitical tensions and relentless buying by central banks globally has led to a strong surge of 28% for gold this year. But as we look forward, where do you see precious metals headed, both gold and silver, in 2025, and what will your target price be?
So yeah, it's been quite a remarkable year for gold. We have seen gold hitting record highs multiple times this year, and we expect the trend to continue. Number one, because of the de-dollarization theme, a lot of central banks are, continuously buying gold, and we've seen that the gold purchases over the last 2 years have been plus, above 1,000 tons. And even this year, we're expecting the trend to, continue. Second thing is geopolitical, tensions that are going on. So that is going to boost safe haven buying more, because there are a lot of unresolved issues that are going on, be it Russia-Ukraine conflict, be it the tensions in the Middle East. And with Trump coming to power, we will have a lot of uncertainty regarding his policies, how the Trump 2 policies are going to pan out, whether he's going to be very aggressive. Although he's, in the campaign and even in the recent sessions, he's shown a very aggressive stance. And even in his cabinet picks also, they are, mostly hardliners on China, Iran, Russia. So we can expect aggressive stance from him, but that we'll get to know only once he takes charge on January 20th. But overall, all of this is definitely going to be supportive for gold buying. So safe haven buying is going to be one of the factors that's going to be supportive for gold. But here, there's one risk to the outlook, and that is the pace of rate cuts in the US in 2025. What we have seen in the recent meeting that's happened, the FOMC meeting, we've seen that they have trimmed the output rate cuts to just 2 for 2025. And earlier, last year we were thinking about 6 rate cuts in 2025, then it came down to 4 and now to 2, because inflation remains a concern. And this trimming, this recalibration of rate cuts is not something that bodes well for gold or silver prices, because it is positive for dollar. So it's going to be a little negative for all the dollar-denominated commodities. So that is going to be the one risk to this outlook, and which is why we are not expecting an accelerated rally like we've had in 2024. We might see an extended gains in 2025, but the gains might be capped because of less dovish or more shift towards hawkish stance by the Federal Reserve.
Might see extended gains in 2025, but the upside could be capped as far as gold is concerned. But Kaynat, China, remember, is the world's biggest importer of crude oil, and it faced demand concerns this year, which led to a 5% decline for Brent crude in 2024. Do you expect stimulus measures which have been announced by China for 2025, that they will lead to meaningful rebound in Chinese demand as far as crude oil is concerned?
Okay. So as far as oil is concerned, what we've had over the last year is that, earlier there was optimism regarding Chinese economic recovery, which boosted prices. Then there was extension of OPEC output cuts that supported, oil prices. But in the second half, what has happened is now the demand concerns have taken over. Markets are concerned about Chinese oil demand. A country that's been contributing to almost like 1 million plus demand growth for the last many years is now, doing numbers such as 0.7 million barrels per day. And in 2025, it's expected to go even lower to 0.3 million barrels per day. So that's something, that's really worrying the oil market participants. And it should, because China is, the biggest importer when it comes to oil. So it's a big negative when if Chinese demand is low. Secondly, what we are seeing on the supply side also, apart from OPEC, non-OPEC producers are producing, having like good output. Like US is producing record high output, which is again going to weigh on oil prices. Then with Trump coming to power, he's already said that he's going to boost oil production. He's going to, give a boost to production leases, and which will add more to production. Right now, also EIA in its outlook said that US is going to produce a record of 13.5 million barrels per day in 2025, and with this production boost, it may go even higher. So on one side we have demand concerns, on the other side we have supply which is increasing, and with no other major demand alternative. Like the main thing is the shift to renewable energy alternatives. So because of that also we are seeing a decline in demand in fossil fuels, and which will continue over the coming years. So this, unless and until oil demand finds an alternative, it's very difficult for oil to see an upside trajectory. So that's why we remain cautious on oil prices for 2025.
Remain cautious on oil prices in 2025, and shifting focus to base metals then. Zinc has outperformed other non-ferrous metals this year by surging nearly 12% in 2024. But what's the outlook when it comes to 2025? Which factors should we keep an eye out on as far as zinc is concerned? And will it be an outperformer yet again next year as well?
For zinc, what's happening is the same thing that happened with copper earlier, that the concentrate, the raw material, output, the raw material output is tight, which is what is, pushing zinc prices higher. And we've seen that, there's been some buying on the, a lot of things like in case of zinc, especially, we've seen that a lot of times what has happened is the cancel warrants or the inventories that are bookmarked for delivery have risen sharply in a day or two, and which led to a rally in zinc prices, because that in turn added to supply disruption concerns. Now for the next year, the outlook, it could be sideways to positive, but for the first half we remain a little cautious, because we are looking forward to more clarity on China's economic policies, its fiscal policies, which it may offer in the March NPC meeting. So once that clarity is there, we might, we'll be able to see what are the policies that they're offering, whether the markets are actually, they are actually okay with that, because whatever measures they've announced in 2024 so far has failed to, make investors feel that it is, enough to boost the economy. And again, next year we are seeing a sub 5% growth. We are, Chinese economy is expected to grow below 5% rate. So unless and until markets believe that the fiscal stimulus or stimulus measures overall are enough to boost the economy, we won't see a sustained recovery or a sustained upside in metal space overall. So we'll have to see about that. Also, when it comes to zinc, steel is a major, demand contributor. So steel demand, and it's expected to contract again next year. So we might see brief periods of upside in zinc boosted by the raw material and the concentrate tightness. But for it to sustain at very high levels or continue to rally sharply would be dependent on steel's trajectory also, which as of now does not look very positive. So yeah, it could be a sideways to positive. First half, we are a little cautious unless and until the Chinese policies come out. And the second half, we could be a little positive, because, China will have to kind of come up with some aggressive stimulus measures. Like they've said in their last Politburo also, that they are moving to accommodative stance, rather than prudent stance that they've maintained over the last 10-15 years. And this stance is something that they've said earlier during the 2008-2010, after the GFC, when they went ahead with aggressive policy easing. Now we are not expecting that kind of aggressive policy easing, because they have a lot of concerns to look at. Because the fear of capital outflows would be something that would keep them from going all out on stimulus measures. But yes, they will have to kind of go ahead and do something to revive their economy, because home prices, their overall manufacturing activity, and the industrial activity, it has to pick up for the GDP to continue to grow above 5%. So yeah, we are expecting China to come up with a lot of fiscal stimulus measures, but not as aggressive that they have done, during the past crisis, which was during 2008-2010. So yeah, it's a sideways to positive kind of trend, because the micro for zinc is positive. The raw material tightness, the inventory concerns on the LME, lower inventories, so that will be supportive. But overall macro concerns would keep it, would cap its upside.
Macro concerns could cap the upside as far as zinc is concerned. But Kainat, which industrial metal are you most bullish on for 2025? What will the target price be, and what will the factors that will drive the up move?
Yeah. So I would say that I am in terms of price increase, I would say it could be zinc, because what we've seen in case of zinc is whenever there is supply disruption concerns or any LME inventory moves in the cancel warrant especially, we've seen that it rallies quite a lot, and it's less dependence on macroeconomic compared to copper, because copper is more dependent on the macroeconomics and Chinese economy. But zinc is less compared to that. So I would place zinc, on the top pedestal. After that, I see copper as one of the best performers for 2025. Once the initial uncertainty, initial, fear and concern about Trump's policies, it starts fading probably by the second quarter or third quarter, we might see an uptick in copper prices. Number one reason, similar to zinc, here also we are seeing the concentrate supply tightness. We have seen the same in the processing charges. They are at record lows right now. They have been set for 2025, which indicates more tightness going forward. Other than that, what we are seeing is from China also, the Shanghai inventories or the regional inventories are consistently declining. It started after the construction period. The seasonal demand, started picking up in September, October, and from then it's continued. It's not that it's discontinued. It's continued, and it is visible in the Shanghai inventories. And so we see that there is a demand recovery in China also. Other than that, what we have seen over the last few years is, of course, China, since China is a major demand driver, almost like 50% of the base metals demand comes from China. It has an impact on demand or on the prices. But what we have seen in the last 3-4 years, especially after COVID, is that there is a divergence between the two. Like the Chinese economy, the Chinese growth has been consistently declining, whereas if you see, copper has been continuously setting record highs. Even this year, we saw a record high in May. So, that is why I am positive on copper, because the micros here are very positive. Concentrate supply is low, processing charges are low, and inventories are falling on the Shanghai exchange. So overall, it looks like there is demand, and especially demand coming in from renewable energy systems, where, the wiring, the electrical, wherever there is demand for electrical wires or something, copper is the most, sought out one. So that is why we expect that, copper prices may continue to, see upside momentum in the coming years.
Copper and zinc, these are the two base metals that Kainat is very bullish on. But slightly longer term question, do you think China's dominance over global commodity market is gradually fading? China, remember, was the driving global commodity market for the last several decades. But now with demand concerns emerging, do you believe China's dominance could perhaps fade over the next 20 to 25 years?
Yeah, because like I said, see, what we've seen is there's a divergence already between growth rates and prices of metals. Even for all the other metals also, we have seen an upside momentum wherein, Chinese GDP is going down. What we can say is, I think it's more to do with global diversification and overall, the demand. Because what was happening earlier was China was the main demand driver, and, Chinese economy was the one that was completely driving the demand, mostly like more than 50%. But right now, apart from the traditional sectors like manufacturing, industrial, real estate, we are seeing an increased demand from renewable energy system, clean energy system. So new demand drivers are coming in, and which are coming from across, the countries. So that is why we could see that, the dependence on China could, start, decreasing in the coming years. So yes, we could see a Chinese, the role of China in the commodity markets from being, a superpower or being the only one that's driving commodity markets is definitely going to come a little lower than that.
All right, so that's the word coming in. Kainat, thank you so much for taking your time out and speaking with us on a whole host of issues and what the outlook is for several industrial metals for 2025.
If you like this video, then like, share and subscribe to ET Now.